Very good morning. Welcome to Chartbusters. Well, it's not a great morning really to wake up to. The US market sold off. The Dowers down 600 points. Asian markets were trading with sharp cuts. But the Nifty, we were down close to around 80-90 points odd. Now we've slipped virtually to the low point of the day. So it's going to be a challenging trading session. The bears have been in control in this series. That's the October series. And as things stand, it appears like the morning session will go really to the bears, but the last hour of trade or so, that's when we'll see those expiry moves really playing out. So we'll keep an eye out whether or not the bulls have a bit of a fight, whether the bears will shut out, some part of their positions. That's going to be very, very important. Could we see a bit of a short covering bounce? Only time will tell. Otherwise, the screens are looking very, very good. And Mangalam, since it's expiry day, I was looking at a couple of strikes. 10,200 call, that was always active. Right. From the word go, that was active. That's added quite a bit, 10,200 call. But that's the important point, the 10,150 call. Now, that is the nearest to the current levels. We're at around 10,115, and that one has added close to around 10 lakh shares odd. So the kind of call writing that we are seeing is telling you now, in fact, the bears believe they can protect the 10,170, 10,180 odd mark. I think 10,200, that should be the mark that, the bears will believe we can defend that with the current global setup and the kind of selling that we've seen. That should hold out. Absolutely. And,
Nigel, it is important because right now we're at the lower end of today's trading range. In fact, at the low point of the day, very close to 10,100. We held on to 10,150 for a bit, and then from there we did fall. Why is 10,100 important? Because you were talking about 10,200, that strike being very active. Yesterday, 10,200 call and 200 put together would give you 100 rupees in premium. So smart money would look to write into that and play for a range of 100 points from 10,200. So that would mean a range of 10,100 to 10,300. Now we're at the lower end of that range. If we break that, all those straddle writers will have to run for cover. So I will have to watch out for where it goes right now. But the way it is falling very close to that 10,100 mark, let's see what happens from here. And like you said, it's expiry. We liken it to cricket, the 5th day of a test match. You never know which way the ball turns. But this time, the Bulls have made, what, 850 runs this series? After making, the Bears have made 850 runs this series after making, what, 700 in the previous series as well. So 1,500 points shaved off.
That's right, Mangalam. I remember the August series, and we're doing a quick recap, and we were talking about what a good series we had. From the top of 10,700, 2 series gone, and we're back towards the 10,100.
11,700, you mean?
Yeah, 11,700. Yeah, 11,700 all the way to around. And by the way, we're on the verge of moving to the 10,100 mark. Some stocks, I think, are current for selling pressure. Bharti Airtel had a big run yesterday. That's moved to the low point of the day. ICICI Bank as well is seeing some selling pressure. And that's why now we're on the verge of breaking that crucial 10,100 odd mark. Mangalam, let's kickstart the show. The top stories. We'll keep a track on the markets as well.
Absolutely. We do that. First up, markets under pressure in line with weak global cues. The Sensex and the Nifty fall 1% each, dragged by Reliance and HDFC. Midcap index falls in line. However, further easing in crude limits the market fall.
And IT stocks are in focus today. Wipro's trading in the green in an otherwise weak market after reporting a strong quarter. The revenue and the margins beat estimates, while Hexaware sees a cut of over 5% after its second quarter results missed estimates. The company cuts its current year 2018 revenue guidance by around 100 basis points to 11 to 12%.
L&T Finance Holdings posts a strong set of earnings in the second quarter, but the stock is under pressure today as the company has clarified 1,800 crore rupees in terms of exposure to IL&FS and 800 crores in terms of exposure to 3 projects of Supertech.
And Jubilant Food falls today despite an inline set of earnings. Management says that they saw higher competitive intensity, which resulted in some cost pressure during the quarter. Brokerages cut their target price on the stock.
And in earnings today, Maruti expected to report muted revenue growth, while Bharti Airtel expected to report a consolidated loss for the first time in almost 15 years.
Okay, all right. The markets, we've moved lower. We're just holding on to that 11,100 odd mark. So let's find out what's the trade over here. Have you missed out the shorting opportunity? Or maybe, in fact, shorting and making money in from these levels? Let's see what's the call. Ashwini Gujral joins in. Hi, Ashwini. Good morning. We're down 120 points odd. The global markets as well have not been supporting the equity markets. What's the trade from here?
Well, you see, the market is oversold, whether you see it from a 2-month perspective or a 2-week perspective. I think the trade to take here is to be long. Why? Because you are at the lower end of the range, and chances are that now nobody is left long in the market, and any sort of recovery that happens will give you a lot of whippy action. So if you buy here, keep a 50-point type of Nifty stop, and maybe like 100 points on Bank Nifty, the risk reward on the upside seems to be much better than on the downside. And maybe if Europe does not open as poorly as Asia is doing, you are likely to see somewhat of a pullback. So either be flat or remain long. That would be my recommendation, because by going short here, you are basically trapping yourself and giving the key to somebody else. So for the moment, Kotak Mahindra Bank is a buy with a stop of 1160, target of 1220. PNB is a buy with a stop of 64, target of 72. And BOB is a buy with a stop of 101, target of 107.
Right, Ashwini, fair point there, a 50-point stop loss and go long on the Nifty. But a couple of these stocks, they're getting brutally sold off. Pharmaceutical stocks, for instance, yesterday we saw a sell-off there, and now we have the likes of Glenmark, Cadila, as well as Lupin, all of them at the low point of the day. Do you think there's a trade on the pharma index on the short side right now? We've seen a bit of correction, and strength in the rupee not aiding their cause as well.
See, now this is not about rupee. This is basically, global sell-off. So what can you say? But overall, pharma, IT, a bit stronger than the rest. But I would think it's just part of the global sell-off. I don't want to attribute any special reasons out there. Other stocks aren't higher either. To say that pharma is lower means nothing.
All right, Ashwini, thanks a lot for joining in and giving us your views. We will keep coming back to you all through the remainder of this day. Sterlite Tech, that is the stock on our radar right now. This after posting a very strong set of second quarter numbers. The profits jumped close to 85%, order book at an all-time high, the stock at the high point of the day in an otherwise weak market. To discuss the numbers and, more importantly, whether these numbers are sustainable or not, we have with us the Group CEO, Anand Agarwal of Sterlite Tech. Thanks a lot, Anand, for joining in. First up, congratulations for these numbers. A question that begets asking is, what led to this strong revenue growth? Was it higher prices in your optical fiber cable business, or was it because of services? And also, if you could break up the revenue in terms of how much comes from services.
Yeah, good morning. So essentially, this revenue growth that we are seeing is a continuation of the growth that we are seeing over the last several quarters. It's almost been now 12 to 14 quarters of successive growth. And we are seeing this on the backdrop of the overall capital investment that is happening globally in data networks. If you see our overall order book has increased to almost 10,000 crores, and at the current run rate, it's almost like 2.5 years of order book that we have. That's essentially what's providing a greater degree of visibility in terms of revenues, and that's getting augmented by the capacities that we are bringing in. So good order book with revenue growth is actually just translating into the EBITDAs and the PATs. So the operating leverage continues to be good. Okay. In terms of the breakup that you spoke about, it's now getting very, very merged, essentially, because anything that we do on our services, where we are building the whole networks, also includes the products. So if we look at it in a traditional manner, it would be, say, about 70% products, 30% services and software. Okay. But increasingly, we are becoming more of a company which is designing the entire network for our customers.
Okay, all right. Good morning, Mr. Agarwal. We'll just get back to the conversation we're having with you, sir. For the time being, we need to focus on the markets. The markets have moved for the low point of the day. We have breached the 10,100 mark that we were talking about on an intraday basis. We have moved to the low point of the day. A lot of stocks are seeing selling. Bharti Airtel has moved lower. Adani Ports is moving lower. And I think we just had a flash about India Bulls Housing Finance. The promoters have released pledge that as well has got sold into. That stock has moved to the low point of the day as well. And a couple of these bigger names, HDFC and HUL, they are little larger weights on the index. Both of them move lower. And that's, in fact, the reason why we've moved to the low point of the day. Even Reliance Industries, by the way, is dragging as we speak. But let's get back. Okay, all right. We'll just get back to that conversation we were having with Mr. Agarwal. Keep an eye out on the index. Actually, this selling pressure is just intensifying as we speak.
The Sensex has turned negative for the year as we speak, and the Nifty has broken the 10,100 mark for the first time since March. So near 6-month lows for the Nifty, and the Sensex turning negative for the year, in line with what took place in the US markets yesterday as well. The Dow turned negative for the year as well. The mid-cap index, that one should come up for you too. All the frontline indices actually at the low point of the day. And when you have stocks like HDFC, HUL, Reliance, for instance, has been the biggest drag on this index. This series itself, it's lost about 18%. And when a stock which has near double-digit weight on the index loses 18%, that only tells you that, we are seeing a fair amount of sell-off. And 10,100 call, in fact, if the director pulls that one up, that'll be very interesting to see how the 10,100 call is doing, because the 10,150 call saw a fair amount of writing. The bears always wrote the 10,200 call, and let's see whether they're getting closer as we dip below the 10,100 mark. The 10,100 call, there you have it, 11 lakh shares added in open interest. So bears are ceding ground from the bulls right now, and as we speak, we're below the 10,100 mark. But from a long-term perspective, equities are the best investment class in terms of generating wealth. So on a quick programming note and reminder, CNBC TV 18 launches a special initiative in partnership with the National Stock Exchange. On the 25th of every month, we tell you how investing in stock market or equities makes one financially disciplined. The CNBC TV 18 NSE Prosperity Day is a monthly program to inform and educate investors about smart investing and enabling the journey to wealth creation. Catch our special coverage all through the day only on CNBC TV 18.
All right, Mangalam, just make that point that we've turned negative for the year. Keep in mind, the FI flows haven't been great. And if you put it in dollar terms, then the Sensex is down nearly around 14% for this year. So that's telling you, put together the fall that we have seen on the Sensex, as well as the rupee depreciation, the FIs, they wouldn't be happy at all. They're losing close to around 14% of their investment just on the Sensex in dollar terms. Low point of the day, slip into a short break. You come back, we'll pull in a couple of managements. Stay with us. Well, we were in conversation with Mr. Anand Agarwal, the Group CEO of Sterlite Technologies. Hi, Mr. Agarwal, sir. Congratulations, firstly, on a good set of numbers. The street seems to be listening into the commentary that you were giving us. The stock is holding in the green in an otherwise weak market. Give us a few details. The first half of the year has been great. You have delivered a revenue growth of around 28% approximately. For this year on the whole, what kind of a revenue growth are we looking at? And importantly, Metallurgica, that's one of your acquisitions. What was the contribution to revenues in the past quarter? And going ahead, how do you look to scale that up?
Yeah, sure. See, over the last several years, we have grown year on year at almost CAGR of 29% on revenues for the last 5 years. And our EBITDAs have grown at almost 44-45%. So we're keeping that track sort of intact. But at the same time, now we have an order book which is at an all-time high. So with a great amount of tailwind and a clarity on order book, I think our growth rates will be sustained and maybe accelerated to an extent. Metallurgica's acquisition that we did in Q2 will also help us from both the base that we acquired and the investments that we have announced and started to do therein. In terms of Q2, I think the overall contribution would be small, maybe about 50-55 crores. But the investments that we are doing on that platform, and with Europe now becoming almost 35% of our total revenues, it will continue to grow pretty rapidly as we move forward.
Close to around 1,080 crores in terms of revenue in this quarter, which is the second quarter. Third quarter, you have new capacity coming on board. You have the full impact of Metallurgica, which you said right now is just about 50-55 odd crores. So what kind of revenue can you do in the third quarter as well as the fourth quarter?
As I said, we do not give specific quarterly guidance.
Assessment, because you have some more capacity coming in, as well as, you know, the full quarter impact of Metallurgica coming in.
Sure. So it would be in similar range that we've had. Yeah. And now we have this large order book also, which we just acquired a few days ago from Indian Navy. So we are yet seeing the impact of all of that, the Metallurgica acquisition, the impact of the new order. And our fiber capacity starts coming in Q4 of this year, the 30 to 40, and then moving from 40 to 50 million kilometers.
All right, Mr. Agarwal, the street seems to be hearing out what you're saying, because that's one of the few stocks. We have only around 380 stocks that are in the green, and Sterlite Technologies is one of those stocks that are holding in the green. So the commentary that you're giving is quite positive. A quick question on your operating performance as well as on your balance sheet. One is that, if I look at it on a sequential basis, there's been a bit of a margin contraction of around 250 to 300 basis points. So you're holding at around 25% in terms of margins. Going ahead, what kind of a margin outlook can you give all our viewers? And secondly, the debt in your books, what is it at? When do you start the debt reduction process?
Sure. See, the margin essentially for us is a combination of different parts of the business which have different profiles. So the fiber business is a better margin business than the services business, but on the return on capital employed, it's sort of reverse. So we look at an overall growth in the margin, and we look at the return on capital deployed. So we are not as much concerned about quarter-on-quarter margin shifts as the total growth that we are seeing in the company. In terms of the balance sheet, the balance sheet, currently the debt has gone up to about 1,700 crores right now, which is essentially due to the major investments that we are doing in the current year. Between last year and this year, we have taken investment decisions of almost 2,000 crores. We are almost doubling our capacity for optical fiber and cables.
When are you likely to pare this down?
So this debt payment will start happening towards later half of next calendar year. So in, say, third or fourth quarter of FY20.
All right, fair point. Thanks a lot, sir, for joining in. The street likes what you've delivered, and the stock is at the high point of the day, up 2%. That is the management of Sterlite Technologies. With that, we slip into a short break, come back, and we keep talking about the markets, because apart from Sterlite Technologies, all the other stocks virtually at the low point of the day, including the frontline indices. Well, we're at the low point of the day for the markets, but keep an eye out on a lot of earnings which are expected today. And the key earnings to expect today, the latest entrant on the NIFTY, JSW Steel, coming out with its second quarter numbers. Nigel, what are the street expectations?
Well, JSW Steel has been a big outperformer actually, but in the last month or so, the stock has corrected close to around 18% from the recent peak. The street is getting a little cautious. Is JSW Steel being too ambitious in terms of organic as well as inorganic growth? But we are focusing on the quarter two numbers, and they'll be very, very good. Top line growth of around 23%, margins will expand by around 300 to around 400 basis points, and the profit number as well should jump up by nearly around 100% or more than double on a low base. Now, what drives the top line growth? One is that we already have the production numbers with us. That's coming high by around 6%. We're working with sales volumes of around 4 million tons, very, very approximately. So small growth in terms of volumes. So bulk of it would be coming in because of higher realizations. Domestic steel prices have been strong, and export steel prices have gone up. One is because global steel prices have gone up. Second factor is that a weaker rupee helps them on that front. Profitability, most important number that you're looking out for. This is the domestic EBITDA per ton. We're expecting at around 11,200 rupees. It'll be a big increase on a year-on-year basis, but on a sequential basis, it'll be a downtick of around 1,300 rupees or thereabouts. What really drives it? Higher realizations, that's what helps them, and that will more than offset the higher input costs. Remember, input costs like iron ore, that's been moving higher both domestically as well as internationally. And if they're going to import any, domestic, any iron ore, then in fact, obviously, the rupee will play a role. Most of the iron ore, though, they're sourcing from domestic sources, but coking coal availability is not there really in India, so you have to import most of that. Over there, they'll get hit on a couple of counts. One is that coking coal prices have gone up, and the rupee has been weaker. The US business, that should do fairly decently on a year-on-year basis. We expect to see a bit of an improvement out there. It'll be coming off a low base. So brace yourselves. 330, those set of numbers. New entry into the NIFTY, JSW Steel.
All right, but up to 330, it's the markets that we have to contend with. Not looking too good, but we wrap on Chartbusters right now. Stay tuned to CNBC TV 18. All the market action taking forward with Trading Hour.